in the books of Raj Traders, we have the Rajkot branch account. Rajkot branch account. Date, particulars, amount, date, particulars. Okay, so we start with the opening balances that are given to us on 1st January 2007. On 1st January 2007, we have a two balance brought down. We have an opening balance, stock, debtors, petty cash. Stock is 12,000. Then we have debtors, which is 4,000. Petty cash, is 500. Furniture is 3,000. Now, outstanding expenses do not come this side because that's a liability. Outstanding expenses that you need to pay. That's not going to come this side. That's going to come this side. But here we have another one which we just calculated, which will be prepaid insurance. Though it's not mentioned here, based on our calculations, we know that on 1st January, we also have an opening balance of prepaid insurance, which is 200. And this opening balance of outstanding expenses I put on the other side, 1st January 2007, by balance brought down, outstanding expenses. By balance brought down, outstanding expenses, which is 150. Okay, then we move on to the rest. During the year 2007, goods sent to the branch. So we have on 31st December. Now everything will be as of 31st December. Even though they say during the year, we don't know which part of the year. So we just put it as 31st December. Two goods. This is the head office sending goods to the branch. Two goods sent to branch account, which is 1,24,000. And then they've also said of which goods returned by branch for 2,000. So we have here on 31st December 2007, by goods sent to branch account. Please be careful. We don't write it as by goods sent to head office. I told you whether the head office is sending to branch or branch is sending to head office, it's put under the same account, which is goods sent to branch account. The fact that it's on the credit side, it's understood that the branch is returning the goods or sending goods back to the head office. 2,000. Next, total sales for rupees 1,80,000, of which 75% was on cash basis. Now, yesterday when we first looked at this, we said we would ignore it, but then we saw a very important statement that said that branch does not retain any cash from its receipts. Okay, so basically 75% goods you sell on cash basis, you're going to get cash, and this cash is sent to the head office. Okay, so branch does not retain any cash from its receipts. So I'm going to say the branch is sending cash to the head office. So I will say by, I would prefer to do it. Some people may put it by cash. I prefer to put it by bank. By cash is also perfectly fine because they have not told us how they are sending it. I'm just assuming that they're making a bank transfer. Okay, by bank, this is cash sales. Cash sales. If I do a calculation, it will be 1,80,000 into 75%. 1,80,000 into 75%. That is going to give me 1,35,000. 1,35,000. 1,35,000. Okay. Next, we have goods worth rupees 2,000 were returned by customers. Now, this I told you doesn't come anywhere because the customers are returning to the branch. The customers are returning to the branch. If the customers had returned to the head office, I would have taken this here. If the customers had returned to the head office, I would have taken it here. This I'm not going to do. Okay, this has to be ignored. Customers paid rupees 36 to branch and rupees 2,000 directly to the head office. So again, we have another entry here. 36 to branch, and we know that branch does not keep any money from its receipts. Sends everything directly to the head office. So taking that into account, I will have again by bank, okay, paid from customers an amount of 36,000 plus 2,000. 36,000 plus 2,000. That comes to 38,000. Now, some people may, what they may do, they may just put by bank once and then show all these calculations, cash sales, receipt from customers. That is also fine. You can just put it once and show it under that. Like how we show to balance brought down and show all the items. Okay. This can also be done. So you can just show by bank and show all the items under it. Perfectly fine. Next one. Discount, I told you it doesn't come, but I showed you indirectly how it is reflected in the debtors account, or it affects the balance, the closing balance of debtors. Okay, so it doesn't come. This has to be ignored. Branch does not retain any cash from its receipts. We've already taken the statement into account by showing these items. Next, amount remitted to branch for expenses was rupees 8,000, which included all these expenses: rent 2,400, salaries 3,600. So we need to show this. The head office is sending money to the branch for certain expenses. So to bank for expenses, and these expenses are rent, which is 2,400. Then we have salaries 3,600. There is also petty expenses 1,200. 1,200, and also insurance premium. Insurance. The head office is paying for this insurance, 1,000. Sorry, insurance is not 1,200. Insurance is 800. Sorry, insurance is 800. Now, say suppose all these expenses were incurred by the branch. I have not have taken this. Okay, there are the first, in one of the first or second problem, I've done this where the expenses are solely incurred by the branch. I have not taken the expenses here. But since the head office is sending an amount to the branch for these expenses, I include this here. Is that okay? Next. So we are done with all this. Depreciation chargeable at 10% on furniture. This is going to affect the closing balance of furniture. Goods worth rupees 1,600 were destroyed in an accidental fire, and head office recovered rupees 1,200 from insurance company as claim. So this I have to show. The head office is receiving again by bank insurance claim. Normally, even when the insurance company makes a claim payment, nowadays nobody pays in cash. They will make a bank transfer. They'll ask you for your bank details and make a bank transfer. And the insurance company has paid an amount of 1,200 towards claims. Okay. Yeah, I think that's it. Now we can show the closing balance, and then directly we go to the closing balance. Before showing, always remember, if you're showing the closing balance, leave a line because there could be a profit or a loss. Closing balance normally should be the last item. So I'm leaving a line in case there is a loss. Buy balance carry down. The first thing that we have is stock 8,000. Now that goods lost by fire, which is given to us, that goods lost by fire will automatically, like I explained yesterday, will automatically reflect in this. Okay, it's going to reflect in this. We are going to do some problems where we will have to prepare the stock account and you will see how this goods lost by fire is taken in the stock account. Like how that discount is reflected in the debtors, I showed it to you yesterday. Same way, this is also surely reflected. This amount has been arrived to after taking this goods lost by fire into consideration. So 8,000 is stock. Debtors are 8,000. Cash on hand is 900. Cash on hand is 900. And we also have prepaid insurance, which we have already calculated. Prepaid insurance, the closing balance, which is 200. Okay. Similarly, we also have something here. All expenses for the year were paid except salary, 250. Okay, so how we had buy balance brought down outstanding expenses. Similarly, we'll have a to balance carried down. Again, I'm going to leave a line in case we have a profit. To balance carried down. Outstanding salary. They've clearly mentioned what is the expense here, and the outstanding salary is 250. The outstanding salary is 250. I forgot another one. Sorry, I forgot another one here, which is furniture. Okay. Now, when I'm showing furniture, furniture cannot automatically disappear. Furniture cannot automatically disappear from here. So furniture will be there. The opening balance of furniture was 3,000. But they are telling you to charge depreciation of 10%. If this thing of depreciation was not there of 10%, I would have shown furniture as it is, as 3,000. The closing value also would have been, because furniture can't just disappear unless they tell you that it's sold or something like that. Okay, so the closing value will be 3,000 minus 10%. 10% of 3,000 is 300. So 3,000 minus 300 will be 2,007. Okay, so this is how this problem is done. So we need to total it now. We'll just check the total. I think this is heavier. The credit is heavier than the debit. Just check the total. It's 2,150 plus 1,35,000 plus 38,000 plus 9,200 is 16, 17, 200 plus 1,100 plus 2,700 comes to 196, 150, 196, 150, 196, 150, and to profit and loss account will be which is the balancing figure will be 196, 150 minus 16,500, 19,500 minus 1,24,200 minus 6,000, 7,200 minus 1,050. Yes, it's 44,000. Thanks, Nigel. It's 44,200. So this is actually a profit because in the profit and loss account, it's going to come on the credit side. Is this clear? If I have not put the date, all this comes as 31st December 2007. It's not a continuation. It's all on 31st December 2007. Any questions?